bank data is stored across a number of very, very old legacy systems.
Yeah.
Like when I think about like bank cores, that is the information that a lot of these banks are going to need to execute their AI strategy, to enable open banking, to do all of this stuff that is frankly going to take them from where we are now, forward of the next 10 years. Are we going to see something similar with the bank cores or the biggest LOSs where they realize that they have got the data, the thing that's needed, and they're going to just make it difficult for fintechs or frankly, maybe even the banks themselves to access that data and use it for what they want to use it for?
That's one of the reasons that smaller banks kind of object to open banking as a mandate is they're not technically ready to support it. So I think that is a very, very real challenge for a lot of banks. I think the reality is that what we're going to see is a lot more investment on the platforms that can ingest open banking data and a lot less on the platforms that output open banking data. And so if you think about the cores, they don't really have any incredibly strong incentive to enable this because enabling it doesn't magically create more money. Now, if Chase shares some of the revenue or if that revenue in some senses trickles down, maybe, but I don't think that's going to happen. So I don't think there's really any monetary reason for any of the companies that support systems that output data to invest more in it. But what we are already seeing are a lot of the platforms that can ingest bank transaction data, modifying how they work, building new integrations, building new partnerships to ingest this data because they know it is really, really valuable, right? So every loan origination system is adding cash flow underwriting and data aggregation as an input into their system. All the payment platforms are looking at how can we integrate open banking to make pay by bank more viable as an option for our customers. A lot of the fraud providers, I was just doing a panel here at Money 2020 where we were talking about how do you fight fraud in the age of synthetic AI-driven identities. And bank transaction data is actually a great fit for that, right? Because bank transaction data is highly authoritative because it comes from banks that are already KYCing their customers. And it has a great depth of history because, I've had a checking account with the same bank for 20 years. You can't fake that overnight, right? Like that's actual inflows and outflows of money. So fraud providers are going to hook into this data. So I think we're going to see a lot of investment on the systems that can take this data in. The challenge for banks, and honestly for fintech companies too, depending on kind of how their systems are set up, is in addition to needing to connect to aggregators to get consumer permissioned bank transaction data, a lot of banks are terrible at using their own first party data.